Overview of CA final direct tax. Chapter 1 talks about basic concepts, defines SSC, previous year, assessment year, residential year, scope of total income. Chapter 2, incomes from not forming part of total income, covers exempt income such as agriculture income, allowances, income of specified entities. Chapter 3, project talks about profits and gains of business or profession. Chapter 4 talks about capital gains. Chapter 5 talks about income from other sources. Chapter 6 talks about clubbing of income. Chapter 7 talks about set off and carry forward of losses. Chapter 8 talks about deductions from gross total income. Chapter 9 talks about assessment of various entities. Chapter 10 talks about assessment of trusts, political parties, special entities. Chapter 11 talks about tax planning, avoidance, and tax evasion. Chapter 12 talks about taxation of digital transactions. 13 talks about deductions, collection on recovery of tax, provisions relating to TDS, TCS, advanced tax recovery mechanism. Chapter 14 talks about income tax authorities. Chapter 15 talks about assessment procedures. Chapter 16 talks about appeals and revisions. 17 talks about dispute resolution. 18 talks about miscellaneous provisions. 19 talks about contracting unethical tax practices like general anti-avoidance rules and measures to curb aggressive tax practices. 20 talks about tax audit and ethical compliance. 21 non-resident taxation. Taxation rules applicable for NRIs and foreign companies. 22 double taxation relief. Provisions for avoiding double taxation through DTA and unilateral relief. 23 advance rulings, binding rulings available to non-resident and specified categories. 24 transfer pricing, arm's length price, general principle and regulations for related international transactions. 25 fundamentals of BEPS, OECD framework to prevent base erosion and profit shifting. 27 26. Application and interpretation of tax treaties, rules for applying and interpreting DTAA. 27. Overview of model tax conventions, OECD and UN model conventions, guiding international tax treaties. 28. On tax, latest development in international taxation, global initiatives such as Pillar 1, profit allocation. Pillar 2, minimum taxation. If we go bit deep dive, let me tell this is not relating to what we are discussing is not related to exam, but we are just discussing the core concepts just to form a basic understanding of what we will be studying in future. Chapter 1 Basic Concepts Overview of Income Tax Law in India. Income tax is a direct tax levied on the income of individuals, firms, companies, and other entities. It is governed by Income Tax Act 1961, administered by CBDT. Applies to both residents and non residents depending on their source of income. A company earning profit in India must pay corporate tax even if its headquarters are abroad. Important definitions: assessee, a person liable to pay tax. Person includes individual, HUF, company, AOP, BOI, local authority, artificial jurisdiction, person. Income includes profits, gains, dividends, capital gains, winning from lotteries, etc. For example, a partnership firm is treated as a person under the Act and taxed separately from the partners. Section 1.3 Previous year and assessment year. Previous year, the financial year in which income is earned, that is April to March. Financial year in which the income is earned, April to March. Assessment year, the following year of the previous year in which income is assessed to tax. The following year, the year in which income is assessed and taxed. Example, income earned in previous year 2024-2025 is assessed in assessment year as 25-26. Charge of income tax. Section 4. Income tax is charged on total income of every person for the previous year at the rates prescribed by Finance Act. Liability depends on residential status and source of income. Residential status and source of income. A resident is taxed on global income while non-resident is taxed only on Indian income. Rates, surcharge and cess. Rates are prescribed annually in the Finance Act. Surcharge, additional tax on high income tax payers. Health and education cess, 4% of income tax plus surcharge. An individual earning 60 lakhs pays tax at slab rate plus 10% surcharge, 10% and cess 4%. Rebate for resident individual, Section 87A. Provides relief to residents with income below threshold. Current rebate up to 25,000 for taxable income up to 7 lakhs. New regime. A resident individual with taxable income of 6.5 lakhs gets full rebate, resulting in zero tax liability. Incomes not forming part of total income covers exempt income such as agriculture income, allowances, incomes of specified entities. Section 10 of Income Tax Act lists income that are exempt from tax. These are excluded when computing the assessee's total income. Key categories include agriculture income, share of profit from partnership, already taxed at firm level, certain allowances and perquisites for government employees, scholarship for education, income of charitable trusts and institutions subject to conditions, dividends from domestic companies depending on the regime. Dividends from domestic companies depending on the regime. Specific income of political parties, local authorities, cooperative society. Example, a student receiving a scholarship for higher studies does not pay tax on that amount. A partner's share of profit from a partnership firm is exempt in their hands since the firm already pays tax. Restrictions on allowability of expenditure. Section 14A. Section 14A ensures that no deduction is allowed for expenses incurred to earn exempt income. Section 14A ensures no deduction is allowed for expenses incurred to earn exempt income. Key points. If income is exempt under Section 10, related expenses cannot be claimed as deduction. Applies to interest, administrative costs, or any expenditure linked to exempt income. Rule 8D provides the method of calculating disallowance if AO is not satisfied with the assessee claim. If assessee earns dividend income exempt under Section 10, the interest paid on loan taken to invest in those shares cannot be claimed as deduction. Administrative expenses like salary of staff, managing tax-free investments are proportionately disallowed. Administrative expenses like salaries of staff, managing tax-free investment are proportionately disallowed. Chapter 3, Profits and Gains Fraud or Business or Profession. Meaning of business, Section 213. Business includes any trade, commerce, manufacture, or any adventure or concern in the nature of trade, commerce, or manufacture. Business Section 213. Key features of the business. Wide and inclusive definition, not restricted to regular or continuous activity. Covers organized economic activity undertaken with a profit motive. Covers organized economic activity undertaken on a profit motive. Even a single transaction, adventure in the nature of trade can qualify as business. Even a single transaction, adventure in the nature of trade can qualify as business. Scope, trading, manufacturing activities, manufacturing, services or speculative activities, activities incidental or ancillary to trade, commerce are also covered. Meaning of profession. Section 236. Profession includes vocation. Refers to specialized occupation requiring intellectual skill, training, or expertise. Includes legal, medical, engineering, architectural, accountancy, technical consultancy, and other similar services. Includes legal, medical, engineering, architectural, accountancy, technical consultancy, and other similar services. Vocation extends the meaning to activities pursued with skill and knowledge, even if not normally recognized as a profession. Income chargeable under this set, section 28. Incomes chargeable under this head, section 28, covers profits and gains from business or profession, includes compensation, benefits, export incentives, value of perquisite, income from trade association. Incomes chargeable under this head, section 28, covers profits, gains from business or profession, includes compensation, benefits, export incentives, value of perquisite, income from trade association. Speculation business. Special rules for speculative transactions. Contract settles otherwise than by delivery. Losses from speculation can only be set off against speculation profits. Method of accounting. Income computed based on mercantile or cash system regularly employed. ICDS, Income Computation and Disclosure Standards, apply for consistency. Computation of profits and gains, section 29. Net taxable income is equal to gross receipts minus admissible deductions, computed according to the provisions of section 30 to 43D. Computation of profits and gains, section 29. Net taxable income is equal to gross receipts minus admissible deductions, computed according to the provisions of section 30 to 43D. Admissible deductions. Expenses allowed, rent, repairs, depreciation, interest, salaries, scientific research, bad debts, etc. Admissible deductions. Expenses allowed, rent, repairs, depreciation, interest, salaries, scientific research, bad debts, etc. Inadmissible deductions. Section 40. Inadmissible deductions. Section 40. Certain expenses disallowed. Personal expenses, income tax, payment to partners beyond limits, etc. Expenses or payments not deductible. Section 48. Ex- Expenses or payments not deductible. Section 48. Disallowance of excessive or unreasonable payment to related parties. Disallowance of excessive or unreasonable payments to related parties. Cash payment above prescribed limits not allowed. Cash payment above prescribed limits not allowed. Profits chargeable to tax. Section 41. Profits chargeable to tax. Recovery of expenses previously allowed as deductions become taxable. Applies to remission or cessation of liability. Profits chargeable to tax. Section 41. Recovery of expenses previously allowed as deductions becomes taxable. Applies to remission or cessation of liability. Other provisions cover specific adjustments like treatment of subsidies, grants, special incomes, compulsory maintenance of accounts. Section 44A. Certain professionals and businesses must maintain prescribed books of accounts. Audit of accounts. Section 44AB. Mandatory tax audit if turnover or gross receipts exceed specified limit. Audit of accounts. Section 44AB. Presumptive taxation. 44AD, ADA, AE. Simplified scheme for small businesses, professions, and transporters. Incomes presumed at fixed percentage of turnover receipts. Deductions in the case of business reorganization of cooperative banks. Section 44DB. Special rules for computing deductions during restructuring or amalgamation of cooperative banks. Computation of business income where partly agriculture and partly business income. Apportionment rules when income has both agriculture and business components. Agriculture portion exempt, business portion taxable. Chapter 4. Chapter 4. Introduction. Capital gains arise where a capital asset is transferred. Taxable under section 45 unless specifically exempt. Capital asset defined under section 214 includes property of any kind held by the assessee whether or not connected with the business or profession. He excludes stock in trade, personal effects, certain agricultural land, etc. Short-term and long-term capital asset. Classification. Short-term held more than or equal to 12 months for share securities or 24 by 36 months for other assets. Long-term held beyond these thresholds. Transfer. Section 247. Transfer includes sale, exchange, relinquishment, extinguishment of rights, compulsory conversion into stock in trade, etc. Transfer includes 247. Includes sale, exchange, relinquishment, extinguishment of rights, compulsory acquisition, conversion into stock in trade, etc. Scope and year of chargeability, section 45. Scope and year of chargeability, section 45. Capital gains taxable in the year of transfer. Special provisions for compulsory acquisition and certain transfers. Distribution of assets by companies in liquidation, section 46. Distribution of assets by companies in liquidation, section 46. Shareholders taxed on capital gains when assets are distributed on liquidation. Distribution of assets by companies in liquidation, section 46. Shareholders taxed on capital gains when assets are distributed on liquidation. Buyback of shares or securities, section 46A. Capital gains arise to shareholders on buyback. Company liable to for buyback tax. Important definitions includes cost of acquisition, cost of improvement, full value of consideration, etc. Transactions not regarded as transfer, section 47. Certain transfers exempt. Gift, inheritance, amalgamation, demerger, conversion of bonds. Certain transfer exempt. Gift, inheritance, amalgamation, demerger, conversion, or bonds. Withdrawal of exemptions. Exemptions withdrawn if conditions not fulfilled. Reinvestment not maintained. Mode of computation. Section 48. Capital gains is equal to full value of consideration minus interest cost of acquisition plus interest cost of increment plus expenses of transfer. Ascertainment of cost. Section 49. Special rules for asset acquired through gift, inheritance, amalgamation, etc. Cost of acquisition. Section 55(2). Specific rules for self-generated assets like goodwill, trademark, tenancy rights. Cost of improvement 55(1) includes capital expenditure incurred to improve, add value to asset. Depreciable asset, section 50 and 50A. Gains treated as short term irrespective of period of holding. Gains treated as short term irrespective of holding period. Market linked debentures 50AA. Special competition rules for debentures linked to market indices. Slum sale 50B. Transfer of undertaking as a whole. Gains computed as difference between sale consideration and net worth. Slum sale 50B. Transfer of undertaking as a whole. Gains computed as difference between sale consideration and net worth. Deemed full value of consideration 50C, 50CA, 50D. Stamp duty value or fair market value deemed as consideration in certain cases. Advance money received, section 51. Forfeited advance money reduces cost of acquisition. Exemptions of capital gains 54 to 54GB. Exemptions for reinvestment in residential property, bonds, startups, etc. 4.21 Reference to valuation officer. Section 55AA. AO may refer valuation to determine fair market value. 55A. Reference to valuation officer. Tax on short-term capital gain 111A. Tax on short-term capital gain 111A. 15% of on STCG for equity shares units subject to STT. Tax on long-term capital gains 112. Tax on long-term capital gains 112. 20% with indexation, special rates for certain assets. Tax on long-term capital gains on certain assets, section 112A. 10% of LTCG exceeding 1 lakh for equity shares unit subject to STT. 10% of LTCG exceeding 1 lakh for equity shares unit subject to STT. Tax on long-term capital gains on certain assets, section 112A. Surplus on sale of shares, capital gains or business income. Circular 6 to 2016. CBDT clarified. Treatment depends on the facts. Assist choice respected if consistent. Income from other sources. 56 to 59. 115 BB. 115 BBJ. Introduction. This is the residual head of income. Any income not chargeable under salary, house property, PGBP or capital gains is taxed here. Ensures all taxable receipts are covered under the Act. Method of accounting, section 145. Income is computed based on the method of accounting regularly employed by the SSC, cash on mercantile. Income computation and disclosure standards apply for consistency. Incomes chargeable under this head, section 56. Incomes chargeable under this head, section 56. Dividends subject to regime. Interest on securities, bank deposits, etc. Gifts received, monetary or non-property, above prescribed limits. Income from subletting, winning from lotteries, crossword puzzles, horse races, any other receipts not falling under other heads. Dividends subject to regime, interest on securities, bank deposits, gifts received, monetary or property above prescribed limits. Income from subletting, winning from lotteries, crossword puzzles, horse races, any other receipts not falling under other heads. Applicable rate of tax in respect of casual income 115 BB. Applicable rate of tax in respect of casual income 115 BB. Casual incomes like lotteries, crossword puzzles, horse races, card games, etc. Taxed at a flat rate of 30% irrespective of the slab. No deductions allowed against such income. Applicability. Applicable rate of tax in respect of winning from online games 115 BBG. Introduced to cover winnings from online games taxed at the rate of 30%. No deductions or set of losses permitted. Deductions allowable 150 section 57. Deductions allowable 57. Expenses incurred wholly and exclusively for earning such income. Expenses incurred wholly and exclusively for earning such income. Examples: collections charges for dividends, commission for realizing rent, interest, etc. Deductions for family pensions 33%, 33.33% or 15,000, whichever is less. Deductions allowable, section 57. Expenses incurred wholly and exclusively for earning such income. Example, collection for charges for dividends, commission for realizing interest, etc. Deductions for family pensions 33.33 or 15,000, whichever is less. Deductions not allowable, section 58. Personal expenses, interest, salary, commission paid outside India without TDS compliance. Interest, salary, commission paid outside India without TDS compliance. Personal expenses, section 58. Expenses related to casual income, lottery, gaming, etc. Expenses related to casual income, lottery, gaming, etc. Deemed income chargeable to tax, section 59. Deemed income chargeable to tax, section 59. Recovery of any expenditure or loss previously allowed as deduction is deemed income. Recovery of any expenditure or loss previously allowed as deduction is deemed income. Ensures symmetry. If deductions was claimed earlier, recovery is taxable later. Clubbing of income and introduction. Clubbing provisions prevents tax avoidance by transferring income to another person in lower tax brackets. Certain income of other persons are included in assessee's total income to ensure fairness. Income of other persons includable in assessee's total income. Income transferred directly or indirectly without adequate consideration. Income transferred directly or indirectly without adequate consideration. Income arising from asset transfer to spouse, minor child, or others. Income from irrevocable transfers. Income of included asset. Income of other persons includable in the individual's total income. Income of other persons includable in individual's total income. Spouse income from assets transferred without adequate consideration. Minor child's income except income from manual work or specialized work. Son's wife income from assets transferred by father-in-law. Income from assets transferred to any person for the benefit of spouse or son's wife. Cross transfer, when two individuals transfer assets to each other relatives. To avoid clubbing, provisions still apply. When two individuals transfer assets to each other relatives, to avoid clubbing, provisions still apply. Ensures indirect transfer are also covered. Conversion of self-acquired property into HUF property 64(2). If an individual converts personal property into HUF property, income from such property is clubbed back to the individual's income. Income includes loss. Clubbing provisions applies to both income and loss. Loss from transferred assets are also included in transferor's computation. Distinction between 61 and 64. Revocable transfer. Income always tax in transferor's hands. Revocable transfer. Income always taxed in transferor's hand. Section 64. Specific situations of clubbing. Spouse, minor child, HUF, etc. Difference lies in scope and applicability. Liability of person in respect of income included in the income of another person. The person in whose income another person is clubbed is liable to pay tax. Ensures accountability rests with the transferor assessee.